So hi, good afternoon everyone, and thank you for joining us today. Just a few reminders before we officially start this briefing. Participants are kept on mute as this is a webinar session. So for any questions, you may use the Q&A chat box provided at the bottoms of your screen. So just don't forget to indicate your name and organization so that we can address you accordingly. The meeting will be recorded and can be accessed at the company's website at ir.cebulandmasters.com. So for this afternoon, joining us in this briefing are CLI Chief Operating Officer, Mr. Jose Franco Soberano, and CLI Chief Finance Officer, Mr. Grant Cheng. They will be discussing the company's financial performance, business updates, and significant milestones for the first quarter of 2020. So without any further ado, I would like to turn over the floor to Mr. Jose Franco Soberano.
Hi, good afternoon, everyone. It's always nice to have you in our briefing. I always like this Q1 briefings because it allows us to meet you sooner than later. We just met with you last month for our full year report, and now we're back. We're back to report still a strong result, and we're very pleased. We're very proud of the CL organization for delivering this. We have a solid start to the 2024. With double-digit normalized growth in earnings to parent, 15% year-on-year. Parent had surged 15% to 978 million from the restated 847 million in Q1 2023, due to strong growth across all business units. Secondly, there was robust top-line growth across all segments, 31% growth in revenues, in consolidated revenues. Revenue surged to 6.2 billion from 4.8 billion in the last year, marking a growth of 31%. So we've never had over 6 billion in a quarter in our history. So this was definitely a very encouraging, very inspiring result for us. Thirdly, strong sales take up. So these are reservation sales, or so a more lagging indicator of our sales. Backed by solid housing demand in VisMin. Across all our inventory, 93% sold. Fourth, steady growth in assets. So we now have over 108 billion in assets, driven by progress in construction from sold units. Lastly, among our highlights, continued expansion of recurring revenue projects. So this has been given a strong push by our organization with our strong pipeline of leasing projects and the promising growth of our hotel portfolio, poised to grow close to 800 room keys. So as I speak today, our Citizens Bacolod welcomed their first paying guests a few days ago. So with that, I now turn it over to our financial report. Of course, no better person than our CFO. Awarded as CFO of the Year 2 years ago, the youngest ever to win it, with Grant Cheng over here.
Thanks, Franco. Okay, so I'm happy to elaborate and put some context now to the numbers, or highlighted numbers that our COO just presented. So CLI's revenues grew 31% from 4.77 billion to 6.23 billion same period versus last year. And this resulted in an increase in gross profit from 2.43 billion to 3.12 billion from the same period last year. By the way, I do want to provide a very important insight or dimension to interpreting and digesting our financial statements and our comparative statements starting this quarter. With the implementation of the new PFRS standards that requires real estate companies to essentially disaggregate the imputed interest income that we have from our sales, that is the reason why our Q1 2023 numbers are presented as such. So when you compare this to our actual filed numbers from last year, they're slightly different, precisely because of the new standards we're implementing. So for our presentation, and our disclosures and our the way we're going to present our performance to you this year, um, in order to have a like-for-like comparison, we have taken the liberty of showing you the restated or the numbers from quarter 1 2023 had we restated uh, and we put together those financial statements using the standards that we are using now for 2024. So again, essentially, it disaggregates the interest component from both revenues, costs, as well as inventories. Okay. So having said that, I'll move on. So with this excellent growth, again, we once again achieved outstanding growth in our top line and as well as our gross profit margin. That has translated to a growth of our net income from 1.124 billion to 1.18 billion. And the majority of that growth now redounds to the parent, or in other words, to the CLI shareholders. Again, this is more of a timing thing because it in the last quarter or in the first 3 months of the year, it was CLI projects that have more percentage of completion. And there were more CLI projects that were delivering construction progress, whereas previously some of the JV projects or some of the projects under our joint ventures were already maturing. And one last context to provide here is that last year we had a one-off gain in other operating income from legacy transactions that we finally realized as revenues. Just to provide some context, it's actually long-standing customer deposits that have already been resolved, and we are now recognizing. So there's a little bit of a one-off gain from last year that affected the comparative numbers compared to this. And so just to show the trend of realized revenues and where we're getting those revenues. So again, realized revenues, we're following the POC standards. It is essentially our sales that is factorized by percentage of completion and also after qualifying for certain criteria. So again, this is a number that I always say, it's a lagging indicator of what our actual performance is. It is reflective of sales that we were able to sign up and secure from prior periods, some of them a few years ago, that we are only just recognizing as percentage of completion comes up. But nonetheless, it is a good indication of how much of the contractual obligation of the developer are being materialized, and therefore how much revenues we can put on our financial statements. And here you could see that the contribution of revenues, it's still the majority of the revenues still come from our affordable housing brand, which is Casamira. And again, this is for both horizontal and vertical. But you could see as well that the strong contributions of both our high-end offering and our mid-market offering. The other thing that I always look at as well is the geographical diversification. So again, here it shows how CLI's decision to expand outside of Cebu has paid a lot of dividends over the years now. Cebu now just stands at 39% of the revenue contribution of the entire CLI pie. As little as 3 years ago, it was 55%. So again, this ensures a lot more growth opportunities for CLI, and it really diversifies the risk exposures from a single geographical market. And it also tells us and it informs us that our strategy of expanding into more markets is probably the way to go in order to derive and to continue our growth path and trajectory. So if realized revenues are lagging indicators, reservation sales are leading indicators. So reservation sales are essentially the contracts that we signed up, the sales contracts from our third-party buyers that are yet going to be recognized as revenues once we start delivering POC or percentage of completion, and once these contracts qualify for revenue recognition based on a certain collection criteria. And here it's interesting to see that because this is a leading indicator, you could see the strong recovery of the middle market segment. From 36% of our sales last year, it's now at 56%. You could see that our economic housing brand, or Casamira, is still very strong. It's still 33%, so one third of our business. And then our premier segment is at 9%. So that tells, that combined with the insights and the numbers I showed in the previous slide, that tells a very compelling picture in that even the middle market, as we move up the value chain of real estate, these are the actual sales values of condo units and housing that we were able to sell. The majority were in mid-market. So we sold 7.18 billion pesos worth of housing products quarter one this year. So our we are on track, and the trajectory of our reservation sales will once again be another growth year this year. This is by no means, we're not hitting a ceiling in reservation sales. Again, the housing backlog of the Philippines continue to be that much underserved that we're pretty confident that we can continue selling this type, or we can continue growing our reservation sales given the right opportunities. But I will also add a couple of insights about our reservation sales, because it's not enough that we are able to we're able to showcase and we're able to present to our investors that we have the ability to sell out our projects, but because it's one thing to deliver quantity, but what's the quality like? And we're happy to report that I believe this is one of the best, if not the best, in the industry. Our delinquency rate stands at 3.12%, and our cancellation rate at 5.47%. So again, delinquency rate meaning these are the buyers who are getting late in their payments, and cancellation rates are those buyers who, if you look at our current portfolio of contracts, how many percent of them turn out to be canceled in the next 12 months? And these are very manageable, and I do believe industry leading, or if not industry best numbers, because you have to understand that the inventory has not been delivered. It sits with us while our buyers are making monthly equity amortization payments. So it is only until full payment that we deliver the inventory. But again, numbers like this allow my organization to be able to have a very strong forecast of what our revenues will be, and more essentially, what our cash flow will be like. And then if you look at where we're getting those sales, so we have a very strong foothold already in Mindanao, particularly in Davao and Cagayan de Oro. And my colleague Franco will be talking about our expansion plans there, and very exciting projects that a lot of people in CDO and Davao are looking forward to, that will serve as fuel for many years of growth for CLI. Okay, next slide. And I'm sharing this, to the in our analyst briefing. I think this is really for the first time now that I wanted to show visibility of our receivables bills combined with our delinquency rate and cancellation rates. And the reason that we're doing this is because we've gotten feedback from the market, even though anecdotally, but it is worth addressing. That the company might have over leveraged its balance sheet, or we might have borrowed too much in order to achieve our growth rate. And I'll be the first to say that yes, we use debt in order to grow, but I would say that of all the business models and companies that went to the capital market and went to the banks to get debt in order to deliver growth, this is the best kind of growth. We put that money to work. We're delivering ROEs of over 25% to our shareholders. And the debt that we borrow immediately goes into revenue generating assets that we will convert, we will monetize as soon as we finish the project. And remember when I said that our financial statement, our profit and loss statements, our revenue recognition is a lagging indicator of our performance, which means that our balance sheet also to some extent underrepresents the strength of our receivables, because we're not yet recognizing all of our receivables there based on percentage of completion. But for proper contextualization of the strength of our cash flow and how much cash flow CLI and I myself will be expecting in our pipeline, this is the slide, and this is the information and the insight for you. We have over 80 billion pesos worth of uncollected receivables. So this is net of collections, ha? Uncollected receivables from our contracted sales. So this is not a projection. This is the actual value of contracts that we have in our pipeline signed with our buyers who are continually making monthly payments into CLI already. In the next, so it means that if today we stop launching projects, if today we stop selling any inventory, we will be collecting, factoring in delinquency and cancellation rates, we will be collecting over 80 billion pesos worth of receivables. So for analysts and for investors, this is something to uh, I hope that you can incorporate in your understanding of CLI and why we sleep soundly at night. We're extremely confident in our business model and our ability to have options because our options going forward for our capital structure, we could easily deleverage simply by collecting on the 80 billion and paying down so much of our debt. There are other capital structure moves that we could do, such as the REIT that we've been talking about for the past few quarters. But I do believe this is an important concept, and there's a very important thing here. You could see that we're constantly raising, or our total amount of receivables is actually increasing year on year, which tells one story, and that is that despite us this is already net numbers, and that means that while we are collecting contracts that have matured, because of our growth rate and our ability to capture more market share, our pipeline of receivables has also continued to grow. No. So, and there's a lot more upside to that because we have over 22 billion pesos worth of inventory. Now, if I strip out the inventory from my township or from a land sale, I have 15 billion pesos worth of condos and house and lots that we could continually sell using, let's say, a ready for occupancy pricing scheme that can generate more receivables for CLI and generate more cash flow. So, this is, I believe, for me, a very important view and an understanding of the company that underscores our financial strength that may not necessarily show up in our balance sheet at this particular time. Okay, next slide. And so, speaking of balance sheet, this is where we stand. So you look at if you look at our balance sheet, the growth in our balance sheet. So we're now at 107 billion pesos, and the vast majority of the value of our balance sheet lies in our contract assets and our receivables and our real estate inventory. So our business model is a tried and true classic house building business model. We acquire land, we build houses, we sell them out, and we sell them out at at incredibly high rate. I think in our later slides you will show that we are consistently selling out our projects, underscoring why the value of our balance sheet lies in those receivables. But at the same time, we're also committed to building out our recurring income projects. Our gross leasable areas are going up, our hospitality operations are going up. So that's something that we will also spend some time to talk about during this briefing. This is a snapshot of, so this next slide is a snapshot of our debt maturity profile, starting this year and next year. So again, to contextualize how we plan to manage this, this is, for me, when we plan our capital structure, uh, this underscores our ability to be able to pay down any obligation that we have in the next few years from both internally generated operating cash flow. Again, 80 billion to address all of this. Oh, by the way, 13 billion out of the 80 billion is set to mature in the next 12 months. So that just gives you some context about how we plan to, how we're able to meet these obligations very comfortably. In addition to the available refinancing options that a real estate company has access to in order to continue its growth, in order to continue its capital expenditure for future revenues. Okay, next. So underscoring all of those numbers, of course, as our primary business and of selling houses, building hotels and offices. So I'll pass you back to Franco, and I'll get back to you later during the Q&A. As if you have any questions on the details of the numbers that we just presented. So thank you, and I'll catch you later again.
Yeah, thank you again, Grant, for putting all that together. And you're right. As we speak now, I just had 3 meetings prior to this briefing, all about our expansion to Cagayan, our positioning in Luzon. So there's still so much we can do. And through these briefings, we hope to make you more aware of the excitement about CLI. So now I'll talk more about our business operations, starting with our land bank.
I'll just add,
Yeah.
by the way, guys, I'll encourage, if you have any questions, please type them out now in the chat box or in the Q&A box so that we could start addressing them in order once we wrap up or once we finish our presentation process.
Okay, so as we reported during the full year briefing, we acquired in Butuan and General Santos, and in true CLI fashion, the Butuan is now in pre-selling and starting land development, while Gensan will start pre-selling very soon. So we are hovering around the 1 million square meter mark, but with the addition of our possible Luzon acquisitions, so this should rise back up later this year. As you can see here, people ask us how we've grown. Yes, definitely through partnerships, but you can see here 74% of what we do is really wholly owned by CLI, and 26% are through joint ventures. And we have a healthy mix of 44% with vertical and 56% for horizontal projects. Interestingly here, you see, we can be called Mindanao Landmasters here. 74% of the existing land bank is there. But definitely we're trying to add more to the Visayas and Cebu areas. Next slide, please. So here is for CAPEX. We started the year spending almost 1/4 of our planned CAPEX for the year of 14.5 billion. A lot of it went into residential development to finance and complete various projects, especially several we are turning over this year. There is just over 4.5% to lot acquisition and 6.9% to investment property, our recurring income property, retail, office, or our hospitality business. So we are definitely on track to reach the 14.5 target that we set. Next. So this is our portfolio, continues to grow. It continues to evolve, and you see some actual photos of our projects here. And we're definitely not done yet. There's still more we aspire to do. Next slide. So real estate sales is really our bread and butter. As you know, we are primarily a residential developer, and this is where it becomes exciting, because in spite of the higher top line, we used to be happy with 1 billion of sales in a year. Now we're doing close to 20 billion in a year. But in spite of the higher top line, we're still growing, and now at 30% year on year. Why do we continue to launch projects? Because we're basically sold out. Now we need to add new inventory. We need to, so the market is looking for more CLI properties, and we want to be more available to that market now. And in spite of the 6.5 billion in real estate revenue, we only launched actually 4.36 billion worth. So a lot of our sales were from existing projects too. So we are depleting inventory of our ongoing projects as well. Next slide, please. So this is that slide we show every quarter, and we're always very happy to show this, that we're now almost 40,000. So sorry, I acted surprised, but I of course know where we are. This is really why we continue to launch more projects. We're looking at Luzon. Even the projects we recently launched are already 71% sold. So hope this is good news to our investors and shareholders who are following this briefing today. Next slide. So just quickly browse through this. So this is basically our showcase. We've fully, when I say fully completed, meaning majority have been turned over, have been operating for a long time. These are 45 projects, and we're still doing the property management for all 45 here. And 97% sold. So there are just 3% of inventory left in these projects, but you can see great photos of the projects we completed, a great variety from the high end to the affordable segments. Next slide. So as Grant pointed out, we are turning over or taking out almost 13 billion of cash collections from our turnover to buyers this year, coming mostly from these projects. A great spread of projects here, Davao, Cagayan, Dumaguete, Bohol, Ormoc, Cebu, Bacolod, Iloilo, and even Palawan. So this Astra Place is one of my favorite projects. This is still one of our single biggest developments in one property, over 130,000 square meters of space, having 2 condominium projects, a Radisson Red, our first major mall and office building. So the residential component will be turned over in second half of this year. Casimiro Ormoc also will be turning over later this year. Belmiro Heights, Cagayan de Oro, Casimiro Dumaguete, and 1 Paragon Place. So the investor relations team have Corfin team put it together well. So these are some of the few projects that will be turning over this year. Next slide. So these are our recent launches that we've accomplished. The newest one being Casimira Butuan. In just a few months, 50% sold. Sorry, in just 1 month, it was 50% sold. So now it's, I think, closer to 70% in 2 months. And we even created a new product line called Mirani Steps, so walk-up units in emerging urbanized areas like Danao City. Next slide. So I'll take you through our office and retail projects. We now have over 40,000 in gross leasable area, and we're on track to reach 110,000 square meters in the next few years. There is strong growth in leasing, 58% growth, and we have over 70,000 under construction from 40 to 110. Next slide. So you can see here, admittedly, when we did IPO, we were basically just purely residential player, and we're now inching towards becoming a really diversified developer with a healthier recurring income portfolio. And we have a good mix of tenants there, from international brands to a lot of the local favorites in the VisMin area. And of course, good BPO partners or tenants as well. Slide. So some completed leases here in DGT, our township, Manila High Street. Very exciting new concept of ours, co-living concept, and we're fully leased actually as of this month. Baseline, our first mixed-use project, has a new wing, our 38 Park Avenue, and our popular Casimiro Towers Guadalupe project with a lot of retail options as well. Next slide. So our hotel developments is very exciting new product of ours, working with different leading operators, working with many designers. Yeah, it's always the end product that's worth it. You see our stadium steps here in the Life project. We have 338 rooms completed and 1,200 more under construction, and should be completed in the next 2 to 3 years. Next slide. So this is our hospitality portfolio. Very happy that in 2023 we added Life, Cebu City, and the Pad. This year we will be adding Srins Bacolod City. Bias aside, should be the best hotel in Bacolod City once it's fully operational. So we have our grand launching next month. Has 200 keys, very well appointed rooms, a 1,000 square meter ballroom, very strong F&B facilities by the Ascot Group. So let's look forward to that and how well it contributes to CLI's bottom line or growth. And you can see our Radisson Red will be next towards the end of the year. Satines Paragon also, and you have our Max Peak, Mercure Hotel in downtown Cebu. Our I would say highly anticipated Abaca Mactan, and of course our crown jewel, the Sofitel in Masters Cebu. I'm not sure about that news report about Sofitel closing in Manila, but we have our Sofitel here in Cebu, owned by Cebu Landmasters. Next slide. So these are 3 new hotel projects that are now going to contribute to CLI's top line. And so you have the Pad, 78 rooms open, Life 80, and Satines Bacolod to opened actually this week to the public and will open in a grand sense on the 2nd week of June. So very proud of these properties. Next slide. So mid-season townships. Interestingly, I visited 2 of these just the past 2 weeks. So next slide. Yeah, we're very humbled to have the opportunity to develop Davao Global. In the evening, it's now a very popular jogging area of the Davaoenos since it sits in the most densely populated part of Davao in Matina, and we have so many. Our roads are the widest. Our areas are the most secure and the most well lighted, so it's become a very popular spot for the Davaoenos, and we're building the first retail component here and then first residential complex here. So we are now gearing up to launch the second residential complex within DGT. So I'll just handle significant milestones so that Grant can prepare for the Q&A. So moving on. Of course, we're very excited and honored to be chosen by the Nippon Telegraph Urban Development Group to be their partner here in the Philippines, starting with a 2-tower residential project in the heart of Cebu IT Park. You can't find a more valuable and bright lot as what we and NTT will be developing in IT Park. So you can see here our hands-on approach, working closely with the leadership of NTT. So you can see a nice photo here. So we are launching our first residential tower before the year ends. So we are very busy now. So thank you very much to our NTT UD Asia partners. Thank you. So this one was a very happy event for us. We want to really bring our brand development to more areas in Mindanao. So we've always been in Davao, Cagayan, but finally we're in Butuan and then Jensan next. And we were received very warmly. It was 50% sold as of March, but closer 70+% sold as of date. So you can see our conversion process. Next slide. So this is where I would say CLI has a lot of work to do. There's a lot of action still in store. We finished the first quarter launching 1 project, so we still have the North Village in Cebu, in the northern part of Cebu, a very well-planned mixed-use development. You have, of course, our Manresa residential offering, a very green-inspired residential development that will be very sustainable and will make a lot of Cagayanons proud there. We can assure you that. We have Belmiro Heights Davao that will be launching very soon. We've been working on that for almost 3 years, but located in the Magtuod area. You have additional expansion of Casimira South, now inching towards 4,000 units built in that area. A very spacious and well-planned development. You have phase 2 of our Consolacion development in Cebu. The phase 1 was already sold out. Additional phases of our Bogo City project. Our Palawan project, when we were starting there, people were asking us, are you sure about low-rise condos in Puerto Princesa? And look at where we are. We already are launching our 5th tower due to the strong performance of the first 4. So additional Casimira South, and then you have our new residential offering in the Davao Global Township with the West Village, and you have our NTT residential tower there with CLI NUD in the Cebu IT Park. So a lot of work to do. To my staff who might be online, let's roll our sleeves, guys. That's how our CEO would always put it together. Next slide. So here, I really give a lot of credit here to our CFO Grant, our corporate finance team. Every fundraising exercise is really about teamwork. It's really about directing, like a big orchestra. And so Grant and the team were able to work with all our underwriters, partner banks, the PSE, SEC, and I believe completed the preferred shares issuance within schedule and exceeded our expectations. Where we were oversubscribed. Our offering was at 3 billion, but we had to activate our oversubscription and raise 4.28 billion, adding this to our equity. And this will improve. This will all be used in project development, especially for housing projects. And we're so honored to our new shareholders, holding our CLI A and CLI B shares. So thank you very much. Next slide. Yes, without elaborating too much, because it's a busy slide, we continue to champion socially responsible initiatives. In fact, I have a meeting with my foundation leaders tomorrow. We take this very seriously, from having certifications to monitoring and recycling, enforcing it in our properties. Now we're in the process of having a new model unit in our affordable housing that will include a solar offering. So we champion this, but we're saying that there's still more that we can do, in terms of socially responsible development. Not just recording the numbers, but really following through this. Next slide.
So we're already in the Q&A portion here. So, we have a couple of questions here in the Q&A box. I'll read this question from Martin Mercado, who is from our friend from China Bank Securities. So he asked about what's our guidance on the launch and take-up target for the year? Any other revenue or income growth target for 2020?
Yeah, I'll take that up. What's our guidance on the launches and take-up guidance? We plan to launch 11 projects this year, worth over 20 billion pesos of inventory, or I'm sorry, 27.65 billion pesos worth of saleable value in the market. And we do our take-up target. Again, it's a rolling target based on when we launch it, but we target to sell out over 75% of our projects within the first 12 months of their launch. Actually, on average, we actually sell out close to 90% of the project within the first 12 months. In fact, some projects sell out sometimes, in my opinion, too fast, because that just means that we haven't squeezed every drop of juice from that orange, and we could have raised prices faster. But nonetheless, we're happy that our customers find our offerings to be the best value for money. And anyway, we have priced those condos already with our margins and our financial models already in place. So it's up to us to execute and deliver those projects and to be able to get and put those margins and therefore net income in our collections and financial statements. But that's the target for this year.
I think the next question is for Sir Franco. He's asking about the updates on DGT laptop.
Yes, of course. I was just there a few days ago. We are definitely busy developing our own, developments within DGT. If I had a choice, I would love to develop all of it on my own. But it's always important to diversify with the strength of other developers within Township. So we are definitely offering commercial lots. We hope to sell a few limited lots in DGT this year, and hopefully to sell upwards of 2 billion worth of lots in DGT. It's a target. But we're very selective. We are only offering to qualified and competent developers in DGT.
Thank you for that, Sir Frank. Another question is also for you. what is our leasing occupancy rate for the first quarter 2024? And what's the comparable period figure last year? So how much GLA is set to be added this year, and how are lease rates for these?
Yeah, so I would say our leasing rate is, I would say, because we are still like in the initial turnover, so the project was just completed, Baseline, Guadalupe, and several. So I would say, in spite of the new completion of these projects, we're at 74% leased out overall on this. But I would have to get back to you on a more stabilized year lease rate, because we are really looking at just the low teens of vacancies in most of our projects right now. So I would say 74% overall, but includes our newly completed projects. What else is the question?
Yeah, but I also want to add to that, and leasing is evolving to be quite. It's going to be a very significant part of our business. From a very low base, yes, we recognized 21 million pesos of leasing revenues from last year, and it's grown 58% to 34 million this year. And that will continue to ramp up because we're less than one third of the way through in building up and turning over our projects with recurring income or with gross leasable areas. So already top of mind, I can name at least 5 projects that will turn over in the next 12 to 18 months that will significantly contribute to our leasing income, whether it's retail or office. So do expect that both the occupancy rate as well as the absolute value of leasing revenues that our assets will be generating for us to ramp up in the next coming quarters.
Yeah. For these additional questions about the GLA developed this year, I'll let our orphan team just get back to you on that. But definitely it includes the DGD City Center, the retail offering we have in DGD. That's over 10,000 square meters of leasable area. And we have Astra. That is our first big mall. That's over 15,000 leasable. So I would say additional 30,000 square meters in gross leasable area this year. Rates have really inched up. It was a first tenant market during the pandemic, right? So you'll have office tenants asking around 400 to 500 pesos per square for office space with air conditioning during the height of the pandemic. But now it's going back up to 600 and above office-wise. Then retail-wise, it's going up to 800 to 1,000. So this is good for the developer side in the VisMin area because the cost is fixed, and this will allow us, not just CLI, but other mall office operators to maintain the quality of our projects by having a better revenue base. So interestingly, also we see increasing demand also from the BPO side. We lease out a few floors recently.
Thank you, Sir Frank. So for the next question, I'd like to read this question in the chat. So this one is for Sir Grant. So this quarter we have noted a lower JV share of the net income. So can you give more color about this, and is this the same trajectory that we'll be expecting for the rest of the year?
Yeah, just to provide more color, no, it's not necessarily indicative of a consistent trajectory because it is a timing issue. It's a little bit cyclical in the sense that some of the joint venture projects have matured, and therefore the percentage of completion and the revenues we are recognizing from those projects have been fully harvested, so to speak. But then we have in our pipeline some very strong JV assets that are in the works. I can already think about joint venture projects here in Cebu, another one in the pipeline in Iloilo, as well as in Davao, and potentially other places in the Philippines. Not to give away too much because we cannot disclose anything yet, but there are joint venture projects in the pipeline that we project will contribute significantly to CLI's top line and bottom line. But I think contextually, or to provide the better background and understanding, So it is cyclical. There are some ups and downs in terms of the ratio of who is the stronger contributor to revenues and net income in a specific period of time. But in the long run and overall, we the mix of business in CLI or CLI only businesses versus the JV projects is around between 25 to 30% joint ventures, and the majority of 70 to 75% would be purely CLI. But the key thing to remember is that um, for all of those projects, even those under joint venture entities, we are the developer in record and in practice. So we are the ones designing, selling, marketing, performing all of the project management, construction management, financial management, tax management functions of such projects. And ultimately, it is a CLI run project, and therefore, at the end of the day, it will be a CLI project. For all intents and purposes.
Thank you for that,
Yeah.
Sir Grant. For the next question, for Sir Franco, can we ask status of the memory development?
Memory development is something that we are prioritizing our main core business in real estate development. So memory development is still, I would say, awaiting construction. All the permits have been secured, and it's now about timing and completing the pre-construction preparations for the project. But it is not a treated as an immediate priority since we are gearing up our expansion in our core business.
Thank you, sir. So maybe two more questions before we end. This one is from Carl C. From Deutsche. In hectares, most of your land bank is in Mindanao. So in terms of value, would Mindanao also comprise more than 50% of land bank?
Yes, it would. Our largest land banks are in Davao and Cagayan de Oro at the moment, which just highlights an opportunity for us because we're not lacking for prospects and reverse inquiries to acquire land all over Visayas and Mindanao, whether it's in our home base here in Cebu, where we have established projects in Bacolod, Iloilo, as well as expansion areas and markets in Luzon and even in Metro Manila. These are, it highlights and underscores the need for CLI to continuously look for more land bank in order to launch projects and deliver on the same kinds of sales results. So yeah, there's a little bit of rebalancing that we need to do, but we need to take this into the proper capital strategy, which is, and at this point, we need to make sure that when we do go on any acquisition strategy, it is balanced with one eye towards how do we raise capital and how do we generate capital in order to be able to acquire and grow sustainably. And right now, with cost of capital being where it is, both on the equity side, with the valuations in the PSE and the stock being what it is, and the debt side, that's a constantly evolving conversation we have at the board and at the executive level.
Thanks for that, sir. Related to discussion also, there were analysts and media are very excited to any update on the Luzon acquisition. Sir Franco.
Yeah. I'm there regularly. Definitely a lot of landowners knocking on our doors. Definitely we need to filter these out well, but we're eyeing Cavite development. Of course, Camsur was our original exploratory area. Now Cavite is coming in strong. And then we have a few partnership opportunities in the heart of Metro Manila as well. So once definitely there is more, I would say once it is more firm and definite, we'll disclose and report it during our briefings or sooner. But it's this year, no? Our office will open very soon in the Makati area. We're excited to see how well our projects will perform there. Will we have the same velocity? Will we have better than what we're doing in VisMin? So we're excited to see how well we can compete using the values that have helped us get to where we are. No, just going a little back to the Mingmore, so I can elaborate. Yeah, we've been definitely working a lot on it. We're very thankful to our LGU partners there. We're really looking at how well the timing will go hand in hand with the regulatory environment when it comes to that kind of development. So we'll update the public as soon as we have more developments about that project. But Luzon, yeah, hopefully soon. In this land bank slide, there's a Luzon part there. Although Palawan is there, for Mimaropa area.
So before we end, maybe we can invite our attendees for the annual stockholders.
Yes, yeah, on behalf of our ExCom and our board, we'd like to invite you to our annual stockholders meeting on June 4, 2024. It's a Tuesday, 9:30 a.m. So you can choose to be with us at VisMin Cebu. Of course, you have to be a shareholder to join, or via Zoom as well. But I would highly encourage at VisMin Cebu City, because usually we serve really good food over an early morning meeting. And yeah, it's very meaningful for us. So the 20th year was last year, so it's our 21st year this year. And we are excited to share our latest updates and for shareholders to meet our various directors and management team on June 4, 2024. So hope to see you there. So I would say in closing, I'd like to thank again our friends from the media who are here, who are supporting this company out of Cebu. And I'd like to thank, of course, our shareholders and analysts for continuing to keep an eye on us. I would say we're very pleasantly happy with how the year has panned out so far. Our new launches are doing well. Construction is very normalized. There are no disruptions. Supply is okay. Prices have stabilized. The inflationary pressures are, I would say, non-existent at this point. So we factor those in our pricing, and that interest rates are still hovering where they are, and we'll just continue to monitor how well they will normalize too soon. But be that as it may, we just want to report how happy we are with our Q1 results, and we hope to come back to you with even better results in the next quarter. So thank you very much. Grant, you have anything to add?
Well, I just wanted to say that the future continues to be bright for CLI. I hope you don't get bored or of consistent delivery of results. But I always tell the team, and when we meet, that it's actually it's a very simple model for us. We know there's a big housing backlog in the Philippines, over 6 million houses. The government knows this, the market knows this, we know it, right? The banks know it. So we wanted to thank our partners for always supporting us, our capital partners, our buyers, our brokers, our suppliers, and contractors. I do, by the way, want to acknowledge and thank the media who has joined us today in order to share the CLI story. But exciting times for me are especially because I am keenly looking forward to the maturation, of course, of our 80 billion in collectibles that gives us so many options of what we can do with our capital structure, whether we want to deleverage very quickly or whether we want to use that to continue and accelerate our growth and expand into new markets that it provides us a very strong capital platform to expand into new markets. And on the other hand, on the other side, of course, I'm keenly looking forward to the maturation for recurring income assets. Everything from Astra, Citadines Bacolod, Patria, that's all going to happen really in the next few quarters. And once those happen and we start generating that recurring income project, then it really improves and transforms not only our cash flow profile, but also our our ability to be able to manage our capital by seriously thinking about what a REIT can do for us. So really watch this space, and we thank you for following Cebu Landmasters. So and for me, it's this is a briefing or these are conversations that I look forward to having with you guys as our business evolves and grows into all parts of the Philippines.
Okay, so thank you very much, everyone. Have a great weekend. Stay hydrated, still very warm. And kami dito sa Cebu, we're hitting the beach just across the island. So have a great weekend.
Have a great weekend, guys.
Stay cool and stay warm.
Thank you.